Mastering market structure is one of the best things you can do for your technical analysis as a trader. When you're moving with the trend, you're going to make money. And when you're not moving with the trend, you won't make money. So in this video, I'm going to teach you about market structure and everything and every nuances that you need to understand about market structure so that you can improve your trading as a trader, so that you can also make money in the markets and also improve your technical analysis. The market moves in three main phases. The first phase is the uptrend. The second phase is the consolidation. The third phase is the downtrend. As you can see here, the uptrend price is pushing to the upside. It's pushing to the upside. And in the consolidation, it's moving sideways. The downtrend price is pushing lower. In the uptrend, we only focus on buys. We only focus on buying at these levels, non-sales. Buying at this level is where we're going to make our most money. In the consolidation, we don't really focus on taking any setup because price is moving sideways. In the downtrend, we only focus on sales. Sales only, and not buys. So as traders, we need to understand that the best times to make money is, or the best phases to make money is when we are in an uptrend or a downtrend. In a consolidation, it's not ideal to trade because price is moving sideways, and so it's very, very important to understand as a trader that you should focus on the uptrend and the downtrend. The uptrend is for buys and the downtrend is for sales. So when price is moving in the upside, as you can see here, it's just typically buys, and when price is moving to the downside here, it's just typically sales. There is a clear-cut way to view the trend in the market as traders. When price is pushing to the upside, it's very, very important to understand structure in the market. Most retail traders will try to do things like trend lines, but one of the most efficient ways to look at market and to understand structure and also get into good moves as traders is to understand market structure, because like if you use things like trend lines are going to kind of mislead you. As you can see here, price broke here. It broke this trend line, so most traders might want to take price lower, but with structure it helps you understand. So when you look at market structure, price pushes with a higher high, the higher low, the higher high, the higher low, the higher high, the higher low. So the higher high and the higher low help us to stay in line with the market, because as traders these are going to be our main buying points where we focus. Where price pushes to the upside and retraces, these are going to be our main buying points as traders. We are going to focus on buying from here. We focus on buying at higher lows. As price pushes to the upside, as you can see here, as it pushes to the upside, it pushes higher and higher, making higher highs and higher lows. These higher highs and higher lows keep the integrity of the market in buys. So it shows us that price is breaking higher and higher. What gives us signal that price is most likely going to buy, or price is most likely going to continue pushing to the upside. So as traders, we need to understand that price making higher highs and higher lows as an indicator of buys or price pushing to the upside. So instead of using things like trend lines, whereby the trend line is going to give you a false narrative or a false signals to enter, maybe to reverse the market, it's better to use things like market structure and focus on the higher highs and higher lows, because it shows you clearly that price is pushing to the upside. So when price breaks this level after us, continue to buy from these levels here. After us, continue to buy from these levels here. And price gives us something that is called a lower low here. This is an indication for us to shift our narrative to sales and to start considering sales. When price pushes to the downside and then it violates or breaks or disrespects this higher low, we consider price to retrace and then consequently push to the lows. And then maybe now we can start focusing on sales from here after us being in an uptrend. So now let's get into now the real chart examples. As you can see here, price is pushing clearly to the downside. It's pushing lower and lower. So price it starts from here. So now let's start now with the buy side. So price starts here, comes, pushes from this low, to this high, and then from this low to this high. Here, as you can see here we form here what we call a higher low, and then we form a higher high, and then price pushes lower here and again forms a higher low, and again breaks here and again forms a higher high. So it pushes again here, it forms a higher low there, and then forms a higher high again. So it forms a higher low and then forms a higher high. So as you can see here, as I've told you previously, price comes and breaks the higher low and gives us what we call a lower low, a lower low, a lower low, and then retraces and gives us a lower, and gives us a lower high, retraces and gives us a lower high, and then price continues pushing lower. Price gives us a lower low, LL, which stands for lower low, and then comes back up again here. Price was looking very clean here. It's not every single time the price is going to look very clean in the chart. So it then gives us a lower high and then pushes lower. It's not every single time the price is going to be clean. There are times where price is going to be consolidated. So as a trader, you also need to understand that. So it gives us a lower high. The lower high, it's illustrated by LH. So price breaks this higher low, then pushes and then gives us a lower high. As I've been telling you, most of the time this is an indication for a sell, or for price to push lower, or for price to react and continue to the lows. So price retraces here and then pushes lower and then retraces again. As you can see here, price retraces here, price pushes lower, retraces, pushes lower, and then retraces again. So this is a lower low, it's formed again, and then it gives us a lower high. As you can see here, structure, as you can see, it continues pushing lower. So as you can also see, it turns again, and what does it do? It gives us a higher high. It violates this level here, giving us a higher high, and then price also then gives us a higher low, a higher low, a higher low. So now this is now where we focus on our entries from there. That can be our entry. As you can see, price push to the upside, and also the same thing here, price breaks this higher low, gives us a lower low, And then this is where we focus on our sales. As you can see, price is pushing cleanly. Price is pushing cleanly. Price is pushing cleanly to the lows. And it's the same thing here. It's the same thing here also. So okay, this is where we find our buy positions, where we buy from. Price pushes, breaks, so here is where we focus on our buy levels. So I personally task themselves because I'm leaving out some levels. I'm not looking at every level because the person might look at this low here. They might look at this low. They might look at this high. I don't consider these lows because these lows haven't broken this high, or this low hasn't broken this low. So we only focus on levels that are going to break this high here. So that's why I only look at this level here. If this level here breaks the high, because most of the time these are considered as weak structure levels. So we need to focus on these levels, and these levels breaking these highs. So these are considered as strong highs. And as you can see, price retraces here and then continues higher. So it's the same thing here. We're only going to focus on these levels here, these levels, and these levels. We don't consider these levels because now these are considered as consolidations. As you can see, price is moving sideways. It's pushing sideways. So yeah, so we only focus on the stronger levels. Only focus on the levels that break these lower lows. That break the lower lows. That's what we focus on. Don't focus on the levels that are on the inside. As you can see here. Here we don't focus here. We don't focus here. We only focus on the levels that are breaking here. As you can see here, price breaks this level. So now let's move on to the next. We're going to look at impulses and corrections. Impulses and corrections are the two main phases in which the market moves in a trend. So as you can look at this trend, this is a bullish trend. As you can see here, this is a bullish trend, and as you can see, price is moving to the upside. So there are two main phases here, which is the impulses and the corrections. So the impulses and corrections are the two main phases of the market. So as you can see here, this is an impulse. Also, this is an impulse. Impulses are literally the pro-trend of the trend. When price is pushing to the upside, we consider this as our impulses, and also these levels here. As you can see here, these are our impulsive moves. These are our impulsive moves. These are our impulsive moves. As you can see, our price is pushing to the upside. So impulses are basically pushes that break the higher high of the price, that break to give us a higher high of the move. So as you can see here, price is breaking higher, and also gives us a very, very nice impulse, as you can see here. So it does the same and then breaks here with a very, very strong impulse. Impulses are literally pro-trend Here, as you can see, price is pushing to the upside. It's pushing to the upside. It's continuing to break higher and higher. The second thing is the corrections, whereby it's relatively smaller, it's relatively smaller. When traders buy and then push price to higher highs, they take off some orders from here, or they sell some orders from here, which is going to consequently lead price to push a little bit lower, so which is going to form a correction, and which is going to lead price to push to the upside. As you can see, these are corrections here. Price breaks lower there. So as traders, as retail traders, must focus on buying from lower pricing, buying after correction moves. If price is pushing to the upside here, our main focus should be buying at these levels. At these levels here, that should be our main focus. A correction move is a counter trend in that particular trend, and an impulse is a pro trend. As well as our main focus is buying from these levels, so it's very, very key. So now let's look at the impulse first correction examples. Let's look at the impulses and the corrections. So yes, now let's look at this example. So price comes on, we will start from here. Price pushes and breaks through this low. It pushes and breaks through this high. It pushes and breaks through this high. And creates a higher high. It creates a higher high. So we consider this as an impulsive move, as you can see here. Here we consider that an impulsive move. Then it pushes, and then it pushes lower. It pushes lower but doesn't break through this low. So we consider this as a correction move. So as you can see, an impulse is a move that breaks at a higher high to give us another higher high there. So it pushes, breaks, and gives us an impulsive move. Whereas this is a correction move because it doesn't break through this higher low. So it is considered a correction. Here, and then price continues higher to give us another impulsive move. Now price breaks through this level. Here now we consider this as an impulse. It breaks through this higher low to give us a lower low. It becomes our impulsive move. It is very, very strong. And then price does the same thing again. It pushes. It doesn't take out this high. So now you consider this as our correction. As you can see, if this is our correction, doesn't take out this high, and then gives us another impulse to the downside, breaking this lower low, breaking the lower low. So we're still considering it as our impulse. So we have been through everything. We have been through the basics of market structure. We have been through impulsive and corrections. We have been through higher highs and higher lows and lower highs and lower lows. The next step that we're going to look at is a breakout structure. So a breakout structure is pretty much a tool or an indication that we use to show us where the trend has broken. So as you can see here, price comes and breaks this it comes and breaks that level. So we consider this as a breakout structure. Consider it as a breakout structure, as you can see. So breakout structure or a boss. Some people call a breakout structure a choke, but for me, I prefer to call it a breakout structure. So as you can see, price comes and breaks there. So it's an indication to show us that the trend has broken. It may be the upside or the lower side. As you can see here, price breaks and gives us a breakout structure. So essentially, this is an indication for us to show us that our structure is changing, or structure is turning bearish, or we are turning bullish, as you can see here. So as you can see, it's breaking higher to give us a higher high. So it gives us a breakout structure to give us a higher high, and then it gives us a higher low, and then breaks structure again to the upside to give us a higher high. And also it's the same thing here. It gives us a lower low, and then corrects and breaks structure here to give us a lower low. So now let's look at some examples of a breakout structure. So as you can see here, let's look at this. So price is bullish, but as you can see here, price comes and breaks structure there. And let's do this. Break structure there. Break structure. So pushes, break structure. As you can see here, does the same here. Does the same there. Break structure there again. So as you can see now, this is a little bit cleaner and less congested like the first one, because the first one there was higher highs and higher lows and lines and everything. But you see, price breaks the high, which is the breakout structure, as you can see there, and then it retraces here, and then it gives us another breakout structure. So now this is an indication for us that price is going to move higher. And so the same thing happens here. It corrects, and then it impulses, breaks structure here to show us an indication of price continuing to push higher. So now we have been through everything, the basics, the basics, the impulses and corrections. So now we're going to look at some of the mistakes that most traders make with structure, or with market structure, or with impulses and corrections. So the mistake that we're going to look at here is something that we call internal structure. So internal structure So it's something that we call internal structure. Most traders mistake internal structure for structure, but when it's just internal structure. So as you can see here, price gives us a higher high, then a higher low, then another high again. So as you can see, these lines here, as you can see these lines. So most traders will see something like this. Most traders will see something like this here, and then they'll look at this as a breakout structure for price to push to the upside and then continue lower. So but which is not the case, because we're looking at structure in this range. So most traders tend to forget. You see something like this, which we consider internal structure, because now this is internal structure. So when they see something like this, they tend to think that price is going to, your price has broken to the downside from here, and so they tend to want to sell price to the downside, but which is not the case here. So it's very, very key to understand that price sometimes might give us very, very small movements that might look like structure, but when it's literally internal structure. So it's also very important to look out for that. So now let's look at internal structure here and why most people might mistake it for the main structure. Here, as you can see here, price gives us an impulsive move to the downside, which is here. It gives us a breakout structure here. It gives us a breakout structure there. So price breaks here. So now this is our lower high and lower low. In order for us to continue with this trend, price has to break this lower low level. It has to break the lower low level. But some traders are going to want to sell from here, to sell from this level, which is a consolidation, because they might see this, as a breakout structure, which is not the case most of the times. They might see that as a breakout structure, which is not the case most of the times. So now this is one of the mistakes that most traders struggle with, most especially beginner traders, and also some advanced traders. They might mistake this for a breakout structure, but when you're actually looking at this range and this range as our levels to continue price or to continue pushing higher. And as you can see, price broke this level and just continued higher. As a trader, you must understand that our main focus is the major structure, which is this, not the minor structure or the internal structure, which is this. So price has to break this low for us to consider entering. That's it for today. Thank you for watching the video. Let me hope that this video helped you to become better as a trader. We have started with a basic structure, with impulses and corrections, with the breakout structure, and also with the mistakes that most traders make. So subscribe, comment, and also like this video.